I'll give you 5 reasons that show that after 3 consecutive losses, you can no longer see the reality of the market and you trade irrationally. You see, it seems like after a few losses, something gets locked in your mind. First, you want to make amends. Then your analyses gradually become aimless. You are looking for confirmation from the chart. Everything will have a different meaning for you. It becomes an incomplete divergence. The sign is back, and worst of all, your mind starts hoping for an easy win based on fatigue, pressure, and psychological need. Now that you've gotten over it, do you know what the biggest mistake you made after the back-to-back losses was? Write to me in the comments. There are 5 psychological reasons behind this repetitive cycle that you should know. When you lose 3 times in a row, the brain goes into survival mode. Exactly the same situation as if you were in a war or caught in the middle of a real threat. In this case, the limbic system of the brain, which is responsible for emotions, takes control from the logical part of the brain, the neocortex. As a result, your decisions are no longer based on logic and analysis, based on fear and self-defense. In fact, at that moment, you think, I need to take it now to make up for it. This is exactly the moment when your brain is deceiving you. In this situation, even if the market gives a clear signal, your brain will look for an immediate escape route, not a proper trade. With 3 consecutive losses, the brain begins to justify events in order to maintain self-confidence. That is, instead of admitting that he made a mistake, he creates a narrative and says that the market was not rational. If I had waited a little longer, it would have been beneficial. There must be some important news behind it that we don't know. These justifications may calm you down in the moment, but they are the most dangerous thing that can happen to you because they cause you to seek approval from the market instead of improving your performance. The illusion of analysis right after a few losses can be the start of a chain of bad decisions. There is also a way that not everyone knows, but with practice, you can find out in 3 seconds whether the result of this trade is a profit or a loss. His practice is this high. After several consecutive losses, many traders unconsciously start to manipulate their trading plan. These behaviors are not analytical or logical. The reason is a lot of psychological stress and fear. They make the stop loss bigger so that they don't get stopped out again. They enter early or late because they are not sure about the signal, or even replace the entire strategy with a new video. Without realizing it, you are no longer moving forward according to the original plan. You are now trading with a tired and anxious brain, and this is where most traders think the problem is the market when their entire behavior is influenced by stress. When you take a few losses in a row, your brain goes into a defensive state. Now you interpret every small fluctuation, every long candlestick, or even a normal change in volume as a vital signal. This means you start entering positions that aren't in your strategy at all. You make hasty exits just because you saw one red candle. You see fake signals as real because you're looking for immediate confirmation. In fact, your brain's focus is no longer on analyzing the market. It's on surviving the next loss. And this is where your trading behavior is not only illogical, but has become completely instinctive and defensive. After a few consecutive losses, your mind starts to create an alternative narrative of reality. This narrative helps you feel less pain, but the cost is very high. Instead of accepting your mistake, you blame the market. It was manipulated, it was bad luck, my internet was weak, and so on. You don't see the clear signals that go against your position because you're subconsciously looking for confirmation. This is exactly the point that traders call the denial phase. You don't see the market that's right in front of your eyes. Why? Because your brain has created its own ideal market and believes in it. 3 consecutive losses isn't just a number, it's a warning sign. A warning sign that if you ignore it, will quickly steer you away from the path of logical trading. You might think you're still focused, but the reality is your judgments, your decisions, and even the way you look at the chart are no longer the same. So instead of running from this reality or pushing forward even faster, take a conscious pause. Figure out why you even got to this point and return to the market with a clear mind. What do you do after a string of losses to keep your mind from getting stuck in the denial phase? And if you've had an experience that helped you break this cycle, be sure to write it for us. Also, if you're looking for the right strategy to exit the cycle of failure, this video is for you.